When most people talk about China's global strategy, they assume it's all about capital, that China is on a mission to raise money, attract investment, and pull in foreign funding to fuel its infrastructure plans. But that assumption is no longer true. China isn't chasing money, it's printing it, allocating it, and controlling where it goes. The People's Bank of China has been injecting liquidity, policy banks have been issuing credit in yuan, and most Belt and Road projects are now funded from within. So if China doesn't need your money, what does it want? It wants your alignment, not as a donor, as a system participant. Let's talk about what that really means and why this shift matters more than most people realize. First, we need to acknowledge the financial reality. China is no longer dependent on Western capital. Its domestic financial system is massive, and its foreign reserves remain among the largest in the world. But more importantly, it's building its own funding ecosystems tied to RMB, backed by state guarantees and aligned with long-term policy goals. That's why China has been able to offer credit to Latin America, Africa, and Southeast Asia without any involvement from the IMF, the World Bank, or Western capital markets. These deals are done quietly. They're denominated in yuan, and they're structured to create long-term dependencies, not short-term liquidity. So the new game isn't about who has the cash. It's about who controls the contract. It's about standards, systems, and soft power. When China offers a deal today, whether it's for a railway in Africa, a data center in Laos, or a port terminal in Sri Lanka, it's not looking for your checkbook, it's looking for your integration, your legal system, your settlement process, your institutional alignment. And this is where Singapore comes in. Singapore doesn't need to compete with China, it needs to complement it, because while China deploys capital and policy, Singapore offers something just as valuable: trust, clarity, and structure. In this new environment, Singapore's role isn't to fund the projects, it's to anchor them. Legal professionals in Singapore can serve as the compliance backbone for RMB-denominated contracts. Financial institutions can offer structured services that manage foreign exchange exposure, escrow mechanisms, and regulatory due diligence. Consultants and trade facilitators can help regional partners navigate how to plug into China's ecosystem without losing sovereignty. And this is exactly what China wants: a bridge, not a boss. Let's be clear, China is not looking to replace the US dollar just for pride. It's looking to remove friction from its outbound growth. It wants more countries to settle in yuan, more infrastructure to be built under its terms, and more legal templates to be aligned with its standards. Every time it signs a new bilateral agreement, it's installing a system. Every time it funds a project in RMB, it's embedding dependency. And every time a contract flows through Singapore, it adds credibility. This shift is subtle, but the outcomes are massive. The winners in this next phase will not be the loudest operators, they'll be the most embedded ones. The advisors, legal minds, and back-end professionals who quietly make these systems work and gain permanent access because of it. So if you're in Singapore and you're wondering what role you can play in this new chapter, understand this: you don't need to sell something, you need to support something. You don't need to invest capital, you need to build certainty. Because in China's next move, certainty is more valuable than cash. This is not about whether you believe in China, this is about whether you understand the architecture of what's being built. And if you do, then you know the real opportunity isn't in headlines, it's in alignment. Drop a comment with "in" if you want to join our private Telegram group where we break down these shifts every day, specifically for Singaporeans who want to see the system early, not follow it late.